There are two main talking points I want to achieve in this video today. One is I want to discuss about NIO's second quarter earning report and why it failed to rally. Definitely can't wait to talk about it because I thought the earnings were amazing. The second thing is I want to tell you why I believe NIO has what it takes to hit $30 by 2021. So basically giving you my full bullish thesis on NIO stock, which at least I believe will help you all to reaffirm your thoughts on NIO stock. So let's get to it. If you have not seen it yet, get ready to be blown away because this figure, if anything, just confirmed that NIO stock is a long-term winner stock. NIO reported earnings per share of negative 16 cents, beating the analyst expectation of negative 26 cents per share. The higher the earnings per share of a company, the better its profitability. Revenue of $526.4 million, again beating analyst expectation of $504 million by $24.46 million. First ever positive gross margin of 8.4% compared with negative 33.4% year over year. Basically, the higher the gross margin, the more capital a company retains on each dollar of sales. And trust me, you want to see a positive gross margin over here. Lowest ever operating sales and net losses has declined by more than 60% year over year. And most importantly, NIO delivered 10,331 EVs in the entire second quarter alone compared to 3,553 EVs in 2019, an annual increase of 190%. Now, I know a lot of you must be wondering how the heck did NIO stock fail to rally despite having such amazing earnings. I mean, this is in fact NIO's best ever quarter earnings report. But here's the thing. 2 weeks before NIO's earning, Tesla too had a good earning, and yet Tesla also failed to rally with its strong earning report. So honestly, I don't see why NIO stock will be any different. The truth is, NIO had over 200+% rally in just over 3 months. That's a big rally in a short term. And if we are talking about in terms of valuation standpoint, NIO is currently trading at 12 times sales. That's why the market can't find many buyers here and now. In other words, the level of risk the stock is carrying simply isn't worth it for many investors, which explains why a bunch of folks out there wants to lock in profits, and also why NIO stocks didn't rally after strong earnings. Of course, this doesn't mean that I think it's time to sell your current NIO stock. Rather, it just means that you need to be patient and think of every dip as a good opportunity to accumulate more shares, because honestly, no one can ever time the market, and neither should you even be thinking of attempting it simply because we all know the stock market isn't rational. I mean, you may be applying all the formulas, logic, and math that you like, but human elements will always add unpredictability and irrationality to market swings. Okay, next, let's get into some serious business and talk about NIO's bullish thesis. So in order for us to know if NIO has what it takes to hit $30, the one thing that all investors must pay extra attention to is vehicle deliveries. And that's why, if I haven't mentioned before, NIO needs to consistently show strong vehicles delivery numbers. Given that NIO's management is only expected to see delivery of 11,000 to 11,500 vehicles in the third quarter, not surprising considering that NIO can only produce 4,000 vehicles at most per month. It's obvious that NIO still needs time, but from the way I see it, this current restriction on the productions will be lifted in the near future, and I expect to see productions get bigger and bigger. And with the even more affordable vehicle in EC6 and increased production capacity by 25% to about 5,000 vehicles per month by September, it's not too difficult to see NIO entering into the path to profitability. Now, let's talk about the auto market in China and NIO's competition. If you look at top 20 car sales by country in 2019, China alone sold close to 24 million vehicles. In other words, China has the largest auto market worldwide, both in terms of demand and supply. Currently, of the 24 million vehicles sold, EVs account about 5% of the auto market share. And the thing is, that number will continue to grow over the next 10 years as the population increases and will slowly shift towards the EVs thanks to the government's commitment in pushing for zero-emission vehicles. And guys, this is definitely not a wishful thinking, as we can clearly see the government's commitment through its subsidized effort. We are expected to see a rise of EVs from a few percent today to 25% over time by 2025. The way I see this playing out over time, the main competition for NIO's luxury vehicles in China will be Tesla. At the end of the day, I see NIO and Tesla as being the only two relevant players in the premium EV market. My bet is NIO's market cap will keep climbing closer to Tesla in the China auto market industry simply because it's highly unlikely that China will allow a foreign company to dominate its market for EVs. And if anything, it seems that NIO's persistence and commitment to establish itself as the premium car in the EV space have definitely paid off and resonated with many Chinese consumers. We are not even into the foreign part yet, okay? If you haven't heard of BAAS before, we are talking about a way to separate the body from the battery and at the same time separate the ownership of the battery from the use of the battery, cutting costs by up to $10,000. In my opinion, this is a very interesting business model for NIO. NIO will own a major percentage of BAAS company, which will be made through a joint venture with contemporary Amperex Technology CATL. If you are wondering who the heck is CATL, CATL is a Chinese battery manufacturer and technology company founded in 2011 that specializes in the manufacturing of lithium-ion batteries for electric vehicles. CATL's battery technology is currently used by a number of electric vehicles manufacturers. In the international market, CATL is collaborating with a growing number of companies including Tesla, Honda, BMW, Toyota, Volkswagen, and Volvo. Basically, NIO's new BAAS company will help to drastically reduce the initial price of NIO's car and over time slowly incur revenue through its new BAAS company. Meaning that NIO is able to sell more and more cars to consumers with less available cash, which means also more and more consumers will buy NIO's car and lease their battery through this new BAAS company. Think about it guys, NIO is the only Chinese EV startup to adopt replaceable battery technology. So far, NIO has built 137 battery replacement stations covering 61 cities across China. So now, you tell me, do you want to get in early to the game or late to the game? In the near term, I still believe NIO is going to remain stagnant around the $15 range. Will I pick up NIO share at $15 now? Definitely not, because the risk reward simply isn't worth it in my opinion. Will I pick up more shares when it dips further? 100% yes. I hope this has at least helped you in some way to overcome fear of missing out. That's all I have for this video. As always, please do your own due diligence. Remember to subscribe and hit the thumbs up button if you like the video. Click here for more videos. And also let me know what you think, and will you buy more NIO shares considering that NIO recorded its lowest ever operating losses and generated positive operating cash flow in the quarter for the first time ever. Till next time.